Honorable Lobien.
Thank you, Mr. Speaker, sir. Contrary to what the Honourable Minister has been talking on everything, all and everything, except on the bill, I would limit myself, Mr. Speaker, sir, on the bill, on the Finance Miscellaneous Provisions Bill. Mr. Speaker, sir, this bill shall be bringing amendments to some 70 legislations, and I shall be speaking on a few amendments being brought that, in my humble view, either do not have their raison d'être in this omnibus bill or are not clear as to their intents and purposes in many instances, as pointed out by Honourable Xavier Duval and Honourable Reza Ouyatim at the last sitting, which has resulted in the Honourable Minister to backpedal on some key components of his budget speech, and which the Honourable Minister, in all humility, ought to have acknowledged this backpedaling in his intervention. I will, during my intervention, elaborate on same, Mr. Speaker, sir. While economic observers, after the presentation of the budget, were forecasting a whole array of measures and amendments that would have aimed at supporting local enterprises and entrepreneurship, protecting employment, defending our currency, reigniting the economy, and alleviating the plight of the downtrodden, this Finance Miscellaneous Provisions Bill has unfortunately adopted a less proactive pathway to bring clarity and transparency to many of the amendments being proposed. Despite significant, unprecedented, and an overtly selfless contribution from the Bank of Mauritius, this bill is first and foremost introducing new ways and means to come forward with measures to tax our people from all spheres of the society, being the super rich, the upper middle class, the middle class, the lower middle class, and the most vulnerable ones. And this, despite being fueled with abundant money from the Bank of Mauritius, I fail to understand this lack of empathy towards our people when government, through this bill, is seizing each and every opportunity to tax them. Mr. Speaker, sir, let me also add, it is without any surprise that these measures have stirred passionate debates among stakeholders and amongst members in this House. But I have a special thought for those in the global business industry who also felt being parked on the sidewalk at a time when all odds seem to be against its very survival as an international financial center. I will come to the amendment being brought to the Financial Services Act later on. But, Mr. Speaker, sir, one of the most unfair measures is the proposed amendment to the value-added tax. At clause 70 of the bill, it introduces a new section 14A to the VAT Act to provide for an enabling clause for the charging of VAT on digital and electronic services provided to a foreign supplier, by a foreign supplier, and it goes on to add at proposed section 14B that VAT shall be charged on a digital or electronic service supplied by a foreign supplier to a person in Mauritius, subject to such conditions as may be prescribed. This is cited at pages 113 and 114 of this bill. And Mr. Speaker, sir, first and foremost, the Honourable Minister has not provided details as to how the suppliers, the subscribers and subscriptions to online platforms like Netflix, iTunes, Amazon Prime Video will be taxed exactly. More confusing also is how, with regard to the other electronic and digital services, this new amendment to the law will apply. For example, online learning platforms or distance learning programs. Thus, Mr. Speaker, sir, yet again, the population at large is being called upon to make sacrifice, and even on their entertainment in those gloomy days of our history, they will be paying 15% more on Deezer, on Netflix, on Amazon Prime, on Office 365, cloud storage services, and online purchase of antivirus softwares, amongst others. And the list is not an exhaustive one. We cannot again on such an important issue in the day-to-day life of the youth of this country and the population at large come with regulation afterwards, as may be prescribed by the Honourable Minister, as mentioned in the bill. And this bill shall thus, for instance, be taxing also online games, online shopping, and online learning as well as it stands. But to make things more bitter for our people to swallow, Mr. Speaker, sir, the imposition of an additional sugar tax is also an outcry measure. Clause 19 of the bill is bringing amendment to the Excise Act so that as from the 1st of November 2020, all sugar-sweetened products will be touched by this so-called sugar tax, which is more a tax on food products, purely and simply, if we take into account all products that will be concerned with as per the annex to the budget speech 2020-2021, pages 8 and 9. You would see, Mr. Speaker, sir, we are taxing Ovaltine, yogurt, cereal products, all basic necessities, basic food for people to eat. In a recent interview published in the Sunday Telegraph, the UK Prime Minister, Boris Johnson, had this to say with regards to the UK government facing calls to impose a sugar tax on food. And I quote, "On putting up prices of food for people who may not be on high incomes, I'm not instinctively in favor of that. There are other ways of doing it," unquote. In fact, Mr. Speaker, sir, there are other ways of doing it. It is not the right time to tax people, to tax their food commodities at this very point in time in our history. At first, when we tax sugar, we put the burden on people who are already burdened. All we are doing is continuing to make food more expensive. While chronic diseases related to sugar, like heart disease, obesity, and diabetes, affect all of our society, they disproportionately affect the poor. The sugar tax is another round of policies that blame the victim rather than uprooting the systems that cause these chronic diseases. Second, putting this policy into place satiates our need to address the real problem. So the real problem continues, Mr. Speaker, sir. In such a difficult time for our nation, taxing our people in such a way is unbecoming. The more so that according to the latest edition of the well-known magazine, CEO World Magazine, Mauritius is amongst the 50 most expensive country in the world in terms of cost of living. The Honourable Minister should at this point in time not press forward with the proposed amendment to the VAT Act, and this should be extended to the sugar tax that is also being proposed by amendments being brought to the Excise Act at clause 19 of the bill. Before going on the amendments being proposed to the Income Tax Act, let me express my dismay with the lack of initiative on the part of the Honourable Minister to come forward at clauses 2 and 3 respectively of the Banking Act and the Bank of Mauritius Act with amendments to those acts with regards to introducing a component of accountability to Parliament in view of major amendments brought to those two acts since the enactment of the COVID-19 Act and the creation of the Mauritius Investment Corporation Limited. This is very important, Mr. Speaker, sir. The role of Parliament is also to oversee those expenses that are being made by the Bank of Mauritius and those monies that are being given to government to do his budget. And in most of the democratic countries, the Bank of Mauritius is accountable to either the House of Commons or to the Senate, for example, in the United States. So, Mr. Speaker, sir, it was in the best interest of this country that such an amendment ought to have been brought to the Banking Act, to the Bank of Mauritius Act, for them to be accountable, for them to be scrutinized in Parliament. With regards to clause 28, Mr. Speaker, sir, the Income Tax Act being amended, the solidarity levy applicable to individuals. The provisions relating to the application of solidarity levy with respect to income derived by a resident individual is being amended as follows. The threshold of the applicability of the solidarity levy has been reduced from 3.5 million to 3 million. I've said earlier on, we are taxing everyone, rich, super rich, upper middle class. The rate applicable to the solidarity levy has been increased from 5% to 25%. However, the maximum solidarity levy payable to a resident individual is limited to 10% of the sum of that individual's net income and dividend received from Mauritian resident company and cooperative and society, and share of dividend from a resident société or succession. Every employer is henceforth required to withhold under the PAY system tax on solidarity levy payable by an employee at the time emolument is made available to such employee. For example, where such employee's emolument exceeds 230,769 rupees in a month, the employer will be required to withhold, in addition to the 15% income tax, an additional tax on the amount exceeding the 230,769 rupees at the rate of 25%, provided that the additional tax withheld does not exceed 10% of the total emoluments. The total income tax burden of an individual in respect of his chargeable income in excess of 3 million will, as a rule, not exceed 25%. However, Mr. Speaker, sir, the marginal tax rate of income earned in the bracket of 3 million to approximately 5.5 million rupees may reach up to 40%, as opposed to a flat maximum of 20% under the previous legislation. No, Mr. Speaker, sir, we are no longer a low-tax jurisdiction. Dividends are now taxed at 10%, and Mauritius may no longer be viewed as a low-tax jurisdiction, given that many countries do not tax dividends. Only time will tell whether we will be attractive enough compared to sophisticated economies like Dubai, Singapore, and Hong Kong. As opposed to what was announced in the budget, this bill is now contradicting its own philosophy, and hence telephony services will not be required to pay solidarity levy if they are making losses. This, to some extent, is in line with the imposition of solidarity levy on companies operating in other industries. To put it simply, Mr. Speaker, sir, the levy should only be imposed on profitable companies. Mr. Speaker, sir, the time for payment of corporate tax by companies in the tourism industry, for example, has been extended, which is a good thing. However, more could have been done in this field, and I would have expected amendments being brought through this bill, such as suspending the advance payment system, reducing penalties and interest, or freezing tax audits for at least a year. We cannot ignore the fact that businesses will take time to recover from the effects of the pandemic, and those hardly hit companies should be allowed some breathing space. With regard to amendment being brought by Clause 21 to the Financial Services Act, the money-lenders license, Mr. Speaker, sir. The Finance Bill introduces a new license under the Financial Services Act, namely the money-lenders license. Under these provisions, a company, other than a bank or a non-bank deposit-taking institution whose business is that of money lending, whether or not it owns property or funds derived from other sources, and whether or not it acts as a principal or an agent, will be required to obtain a money lender's license from the Financial Services Commission. The carrying out of a money lender's business without a license will carry a fine of not exceeding 1 million rupees and to imprisonment for a term not exceeding 5 years. But, Mr. Speaker, sir, I do not see the rationale why this component is being taken away from the Bank of Mauritius and being handed over to the FSC. Why? It is only after this bill is voted that the FSC is expected to issue appropriate guidelines and instructions as well as prudential requirements for the supervision of money lenders. Mr. Speaker, sir, it is as if, once again, we are putting the cart before the horse. You need to have proper guidelines and directives drafted and same disseminated amongst all stakeholders first, and then come forward with the necessary amendments to the law. Because we all remember, Mr. Speaker, sir, how in the past amendments were brought to the same act in the same manner to allow and empower FSC to give private banking license. And we all know how the ominous Alvaro Sobrino obtained his license. So, Mr. Speaker, sir, with a note of caution, Mr. Speaker, sir, I shall invite the Honourable Minister to reconsider this amendment and come to this House with a separate bill, as money lending activities have been identified by international agencies as one of the main areas where money laundering activities flourish. The Minister, the Honourable Minister, should address this issue properly. With regards to Clause 42, amending the National Pensions Funds Act, Mr. Speaker, sir, it is commonly said, too much taxation kills businesses. And it is wise to balance the act of imposing additional taxation on taxpayers and boosting the economy. However, on this side of the House, we are utterly disappointed that despite the call for a wider consultation from the Association of Actuaries, there are still no signs that the government will revisit the introduction of the Contribution Sociale Généralisée. The Finance Bill 2010-20 does not shed light on the rate to be applied or the persons excluded from the payment. On the basis of equity, Mr. Speaker, sir, should all employees, irrespective of private or public sector, be called upon to contribute to the fund? This has not been addressed at all, unanswered by the Honourable Minister. So the CSG, as it is couched, Mr. Speaker, sir, is a disguised tax and has been described in several quarters as an unsustainable scheme and is more a Ponzi-like structure. No studies, nor any report elaborated by professionals in the sector have been undertaken to see to it whether the terms of fairness and the impact it will have on the cost of doing business in Mauritius will change for the better or for the worse. Unfortunately, Mr. Speaker, sir, such an important component that will change the routine of employees as well as employers ought to have been brought to this House by way of a substantive piece of legislation and not in a piecemeal manner as it is the case now. Same for the amendments being brought to the Pharmacy Act as Clause 50. With all the saga of purchase of medical equipment, Honourable Minister is gone, pharmaceutical products under the cover of emergency procedures, and major investment funds being committed through the Mauritius Investment Corporation, the introduction of a new pharmacy bill should be brought to this House instead. Mr. Speaker, sir, I will conclude with the Economic Development Board at Clause 16 of the bill, whereby, with the introduction of a new Section 17B, EDB will be getting additional powers to process application for Smart and Innovative Mauritius Development Certificate, and also with the creation of the Sports Economic Commission, which will fall under the ambit of the Economic Development Board. This is a dangerous precedent, Mr. Speaker, sir. Again, when such powers are being given ad nauseam by this government, making EDB as if already, as in the case of Landscope Mauritius Limited, operating as a super ministry through those amendments, the Sports Economic Commission operating under the ambit of the EDB is as if this government does not even believe in or want to empower its own Ministry of Youth, Empowerment, Sports and Recreation. Same was done with Landscope Limited, with the creation of this famous land bank that they want to create for the agricultural lands. Again, this ought to have come before this House as a separate bill for us to debate on the accruing powers being given to the Economic Development Board. Honourable Isabelle Duval has rightly so pointed out the confusion surrounding amendments being brought to the Workers' Rights Act, and the opposition whip, Honourable Shakil Mohammed, has also expatiated on same, and I know that there has been an attempt to propose some cosmetic amendments at committee stage. So I shall seize this opportunity to urge the Honourable Minister to take stock of what honourable members from this side of the House have voiced out and bring the corrective measures that we have canvassed. Mainly, do not go ahead with the Contribution Sociale Généralisée. Instead, go for a wider national consultation with all stakeholders before coming back to this House with a substantive piece of legislation. Do not go ahead with the tax on food, on cereals, on yogurts, on custard products, on Ovaltine, on basic food necessities of our citizens. Do not go ahead with the imposition on VAT on digital and electronic services. This is not the right time to debate on these issues. People are suffering, people are stressed, people are distressed. This pandemic has brought the biggest shock to workers' wages since independence, and it is the paramount duty of government to support our vulnerable households, our stressed working class, and government has got the means to do so, as per the very figures mentioned in the estimates 2020-2021 at Appendix A summary of revenue to do so. And taxing our people is certainly not the way forward. I will end on this note, inviting the Honourable Minister, inviting government to remediate matters. We've got still time not to go ahead with those taxes. Do not tax our people, for God's sake. Thank you very much, Mr. Speaker, sir.